Hi, today's video is on the accounting equation. Okay, it's a very basic tool used to help students to understand the whole accounting process better, even though it's not actually part of the accounting process. I'm not going to be drawing the whole table for the accounting equation. I'm just going to be going through a few things and highlighting what's important for you. Okay, first of all, the accounting equation says assets equal to owner's equity plus liabilities. Okay, so your accounting equation is split into 3 columns, and those are your 3 columns. Okay, below each of those headings you have subheadings. Okay, so every asset will be listed underneath the asset column. There are 4 things which affect owner's equity, which will be listed in a column, and then there will be liabilities as well, which will be listed. I'm going to give examples of 3 assets: bank, vehicles, and let's say accounts receivable. So those will be your 3 columns in the asset section of the accounting equation. Obviously, if you've got 10 assets, you'd have 10 columns under this heading. Owner's equity is always only made up of 4 accounts. You have capital, you have drawings, you have income, and you have expenses. And again, those make up your 4 columns in the owner's equity. Very important, capital and income will always be increases in the owner's equity column, and drawings and expenses will always be decreases. Okay, this positive and negative just shows the effect of these accounts on the owner's equity. And the last column is liabilities. I'll give you 2 examples: loan and accounts payable. Okay, so those are your subheadings for the accounting equation. Obviously, it will change depending on what type of assets and liabilities you have for that specific question. Okay, at the beginning over here, you'll have a small little column for your transaction number or date. Okay, so please don't forget about the first very small column to show your transaction number. So let me give you one example. Transaction 1. Let's say the owner contributed capital of 50,000. Bank will increase with 50,000. And then capital will increase with 50,000. Once you are done with the transaction, you need to make sure that your equation balances. So does assets equal to equity and liabilities? In this case, assets is 50,000, equity is 50,000, and liabilities is 0. So 50,000 is equal to 50,000. When you are done with the transaction, you draw a line underneath it, and then you move on to the next transaction. When you are done with all of your transactions, right at the bottom, you have to balance the equation. So what this means is, right at the bottom of your accounting equation, you will add up everything. Okay, your drawings and your expenses will be negative amounts, so please remember to put that in brackets. And then you say, you add up your assets, it must be equal to your equity plus your liabilities. And this is how you balance your accounting equation. You add up your assets, you add up your equity, you add up your liabilities, and then you prove that the assets is equal to the equity and liabilities. That is the format that you need to remember for the accounting equation.